Ever wish trading charts were easier to read? Wish granted! Meet Bollinger Bands. They're like a secret decoder ring for stock prices. Imagine a band or a ribbon that wraps around the price of a stock. That's the basic idea of a Bollinger Band. It helps us see when a stock is acting normal and when it's going wild. Think of it like this. The band is like a path. Sometimes the stock price strolls down the middle. Other times it runs to the edges, or even a little past. Bollinger Bands are actually 3 lines. That's it. Just 3 simple lines that can tell us a lot about the stock's behavior. Don't worry, it's not as complicated as it sounds. Once you understand these 3 lines, you'll see how straightforward it can be. First, the middle band. This is the average price of the stock over a certain time. Like finding the middle ground, it acts as a baseline, helping us understand the general trend. Second, the upper band. This line is above the middle band. It shows us when the price is getting high, maybe even too high. When the price touches this band, it might be a signal that the stock is overbought. And third, the lower band. You guessed it. This one's below the middle. It tells us when the price is dropping low. When the price hits this band, it could indicate that the stock is oversold. These 3 lines move with the stock price. They help us see the ups and downs more clearly. By observing these bands, traders can make more informed decisions, spotting potential buy or sell opportunities. Now, for the fun part, using the bands to make smart trades. When the price hits the upper band, it might be overbought. Like a hot toy everyone wants, the price might be too high. It could be time to sell. Oppositely, if the price drops to the lower band, it could be oversold. Think of it like a sale on a forgotten treasure. It might be a good time to buy. Remember, Bollinger Bands are just clues. They don't predict the future, but they give us valuable hints. Section 4. Riding the Waves, Volatility and Bollinger Bands. Bollinger Bands aren't just about high and low prices. They also tell us how jumpy the stock is. When the bands are narrow, the stock is calm, like a quiet pond. But when the bands widen, watch out! The stock is getting volatile. It's like the pond turned into a choppy sea. Knowing how jumpy a stock is helps us manage risk. It tells us if we're in for a smooth ride or a roller coaster. Section 5. Bollinger Bands in action, a real-world example. Let's dive into how Bollinger Bands can be used in a real-world scenario to make informed trading decisions. Let's say you're watching a company called Sunny Snacks, a popular snack manufacturer known for its innovative products. Their stock price usually stays within its Bollinger Bands, providing a reliable range for traders to observe. Suddenly, Sunny Snacks invents a delicious new cookie that captures the market's attention. The price shoots up, hitting the upper band, indicating a strong upward momentum. This could be a chance to sell some shares and lock in profits. Later, bad news hits the market. Turns out the new cookie has raisins, gasp, which many customers dislike. The price tumbles to the lower band, reflecting the negative sentiment. Now, you might consider buying some more shares at a discount, anticipating a potential recovery. See how Bollinger Bands helped you spot trading opportunities? They provide valuable insights into market conditions. They're like having an extra set of eyes on the market, guiding you through the ups and downs with greater confidence and precision. Section 6. Your turn to trade smart Bollinger Bands recap. Bollinger Bands might sound complicated at first, but they're really just visual aids for traders. They consist of a middle band, which is a simple moving average, and 2 outer bands that represent standard deviations from the average. They make it easier to spot trends, volatility, and potential buying or selling opportunities. By observing the bands, traders can gauge the market's mood and make more informed decisions. Remember, the bands show us the stock's usual price range. When prices move outside these bands, it can signal a significant event. Prices hitting the upper band might mean it's overbought, suggesting a potential sell opportunity. Prices hitting the lower band might mean it's oversold, indicating a potential buy opportunity. Wide bands mean high volatility, while narrow bands mean calmness. This helps traders understand the market's current state and adjust their strategies accordingly. So there you have it. Bollinger Bands are a powerful tool in your trading arsenal. Start using Bollinger Bands and you'll be on your way to making smarter trades. Happy trading! Remember, practice makes perfect, so keep analyzing and refining your approach.